All right, welcome to the next video in the trading course. This video actually may be a bit lengthy, so grab your notepad, grab your snacks, whatever you got to do. I will be actually teaching my support and resistance strategy that I look for in these trades. I will teach you how to enter the trade. I will teach you how to look for the exit of the trade. Um, I teach you how to draw the support and resistance. I teach you small things what to look for. I will also teach you how to implement the market structure um, video that I've taught already. I will also show you trend lines if they are there. Trend lines are not always there. But without further ado, I'm not going to take too much time on this. Let's just hop straight into the charts. Real quick, if you're looking for a new broker or looking for a broker in general, try Liquid Brokers. My favorite broker. They have low spreads starting from zero. They have cheap commission fees. They're a regulated broker as well, so your money is protected. And they have different chartings that you can use and whatever best fits your trading style. Fast withdrawals, fast deposits, whatever you want. So yeah, check out Liquid Brokers. All right, so I've drawn a small diagram of resistance at the top, support at the bottom. Pretty much what it is touches between the support and resistance where it doesn't break. So once I get two touches here, I deem that as support and resistance. So once it comes up, it comes back down to the support. Sometimes it can stagger like this, comes up to the resistance, stagger back down, come up. This is just an example of what support and resistance look like or could look like. We also consider this area an area of consolidation. Typically, when I see consolidation, I get excited because I either know I can trade the support and resistance, or I can trade the breakout of the support and resistance. I'm not going to talk about the breakout strategy in this video. I will talk about the breakout strategy in the next video. Pretty much to draw the support and resistance, you find your two areas here that touched already, and draw it up. Me personally, I like to draw it out in advance, even though if there's no candlesticks there, just draw it out because it's a possible zone that can go be touched and then bounced off of. And same thing for support. Get two touches, draw it out, possible zone that could be touched and bounced off of. And I'm going to actually find some candlestick examples so you can see what I mean. We see right here, we come up, come down, come up, come down. We're just bouncing, right? So I typically like to draw the resistance. This is resistance. I see this touch here, a push down. I see another touch. I'm going to go ahead and draw my resistance out. I typically go from either the wick or part of the wick down to a little bit of the body of the candle to make it pretty nice zone. Here I see we have actually resistance as well. So I usually target the bottom here. Like if I see it touching a area, it don't have to be perfect, like the same exact length and everything. So I see an area here that it kept touching. I'm gonna draw it out a little further. So I see an area here, it came down, it wicked, came up, wicked again, and pushed off, went right to that zone, the resistance zone, pushed back off, right down into the support zone. You see it bounce between until it breaks. If I'm looking to trade this and I see a big, strong volume candle going to the downside, I probably won't get in until I see where it's stopping. So we see it stopping here. If I wanted to take a long position to the upside, it would have been when it broke previous structure and went to the upside, but my target would have been the resistance zone. Now, if I want to take one to the downside, you can see a small trend line here because you get the lower lows, lower highs, lower low, lower high. Once I get this 2-point here, I see we come up to this trend line. I notice we already broke structure. So not only do we have this structure broken right here, we have a push down, push up, and then we have this trend line, and we're in previous structure. So once I see this right here broken, I'm entering my trade here, and I'm targeting the previous resistance on this side here. And the reason I'm targeting that is because it's an area that keeps getting rejected by price. So I'm gonna go ahead and target that area. And once I come down to that area, I take my profit. And then if I wanted to go, I'm looking for a long trade, I see we have like a mini resistance right here. You have to look for the mini resistances too. So I see we have a mini resistance here. And typically I drop to the 5 minute, take my trades. It'll all be the same thing. This is a 15-minute chart. Just quick note, I don't use the 1 minute or I don't use the 4 hour to make my trades. Well, I use the 1 minute very seldom. But as far as the 4 hour, I only use it to draw zones. I don't look to take a trade. I'm not basing my trades off the 4 hour. Back to this, you have many resistances in here. So I see we get a higher high here, and then we have a higher low here. So once I see that, I'm gonna go ahead and push this trend line, the one I've drawn previously, out. So now what I wanna do is, I see the previous, and then I see a mini resistance break. So since I see the mini resistance break, if you get in, it would have came back down right into the support zone. Typically, if I see a push off that, then I would have entered, because even though we broke this mini resistance, the previous market structure is right here. I know the chart is looking kind of crazy now, but the previous market structure is right here to the left. And once I broke that, and I see us pushing back up, I would have went ahead and took my trade. Once I seen this green candle, I would have got in on the close of the green candle, took the trade, and it targeted this area of resistance here. Sometimes you can target a little shorter. I like to be safe, target a little shorter. I don't care about catching every single hit or anything like that, because you'll lose money that way. And if I wanted to look for a trade off of this here, I would have done the same thing. We have a market structure here. We break that structure. We get a green candle push to the upside, and we reject it. Once I seen this rejection coming off, I would have took a short on this rejection, and I would have been targeting the resistance. The support. The support. I would have been targeting support. And then eventually we broke out. And I'll teach you the breakout strategy next video. But that's one example of support and resistance. Got a support resistance zone, and got a nice little support zone. Again, this area is called consolidation as well. When it's just bouncing between support and resistance, it's called consolidation. We came down, pushed up, rejected off, came back up, rejected off, rejected. So it made me draw a support and resistance. And another tip too, just because there's a resistance zone does not mean there's going to be a support zone, or just because there's a support zone does not mean there's going to be a resistance zone. It could be a resistance zone and it can be a support zone solo. It don't have to be there together all the time. So once I would have seen that we rejected these wicks here, and let's say I wanted to take a trade to the upside to the resistance, since I got it drawn up, I'll drop down to the 5. That's where I make my entries. So it's even stronger now on a 5 minute. All right, so I'll zoom in a bit. I see we got a equal, but we got an equal high, but we do have a higher low. So that would have triggered my interest in taking this long. All right, so once I see we have a higher low, we got a trend line. Yeah, we got a trend line here. So we got the trend line here. We have a higher low here. We're coming off with, not only are we bouncing off that higher low, but we're bouncing off that zone 4, the support and resistance. So we push up, and then we get another push down. And then if you look to the left, it's pushing a little bit below the structure, but it's still considered a higher low. So personally, if I would have taken this trade off of this here, I would have had my stop loss. I would have had my stop loss pretty tight somewhere in here. And then of course take profit somewhere up here. The minimum I typically want to target is a 1 to 1.5. Honestly, I usually hit 1 to 2s or 1 to 3s pretty often. The trend line break, the push off the support zone, that would have made me feel confident in taking a trade. Not only that, it broke this little resistance zone here as well. So that would have made me a bit confident in taking that trade and staying in it until we reached our, our resistance zone or take profit zone. Now, if we're coming up to the resistance zone, I see here we have a market structure break, right? So we broke structure, we pushed back up into that previous structure. Once we pushed into that previous structure, we started slowly going down, which you would have still made profit and hit kind of towards the zone. But like I said, we don't get greedy. We don't want to try to target the bottom of the zone. I want to try to target somewhere near the zone, or at least targeting a 1 to 1.5 or a 1 to 2, 1 to 3, 1 to 5, which, whatever case it is, because each one is different. So if I would have got in, I probably would have took profit once I seen a market structure break here and, took my profits and ran. Same thing here. We push up. There was nothing here that would have, we get a break here on this small resistance. I could have took off of that because remember, this is a 15-minute support and resistance. I could have took a trade off of that, but I knew it would have been mainly small profits if I wanted to do that. But I am a scalper, so I probably would have done it. Typically only trade once to twice a day. I call it a day. I don't want to get too greedy. But so we get a push down here. I see a nice little trend line here. See a market structure break, a push up, market structure break, push up into previous structure, push down towards the resistance zone, and then we got a straight push off the resistance zone. So if I got to take this trade, I would have looked left at this structure. If we haven't broken this structure, I would not take this trade because I do not take trades off one confluence. I would not take this trade. Now, once we rejected here and then pushed up, you see we broke here, came down, and the previous structure became a support zone. So it pushed down into the previous structure and then pushed up. Then I would have took the trade. Then of course, since I'm on a 5-minute, I probably would have took this profits here. We've been bouncing off this zone pretty often on a 5-minute. Even if I draw the zone out, we've been bouncing off that zone on a 5-minute pretty often. And it goes straight across. See if I can find another example for you guys. We do have a nice resistance zone here. So you see we push up, bounce off, push up, bounce off, push up, bounce off, push up, bounce off. But as you see, like I said, we don't have a support zone, not a clear support zone. Like we have a low here, which I just go ahead and mark the low on this 15. So this would have been a bit difficult to trade, but it still can be done. So we have that low, we have that resistance zone. You drop to the 5-minute. That is a long area of consolidation. Sheesh. There's a lot of scalping opportunities in here. So if I would have seen this, I would have took my short right off that resistance zone. As soon as I got the push down, I got a lower high. We broke this structure here, pushed right back into that previous structure. As soon as I would have seen that, I would have took that short. Man, I would have targeted somewhere in this area. But I do something where I trail my my trade. So I would have got out, at profit, or I would have got out as soon as I seen a break in structure. That way you protect your profits. There was no clear sign of getting a trade here. The sign here would have been previous structure were broken. We come up. We're not going to always test right into the previous structure, but we come up. We get a nice little doji here, candle. And if I would have got that doji, it's coming off that, I would have shorted and of course target in this area. But knowing me, I would have trailed and I would have already been out this trade before we even got down here. We got a mini resistance zone right here. So we got a mini resistance zone right there. As soon as I would have broke that mini resistance zone, I would have took a short to the downside. Then you even get a, what was that? You even get a, not resistance zone, I'm sorry, support zone. You get a mini support zone here. As soon as you broke that support zone, I would have took a short to the downside. of course, targeting the area, but trailing my trade, we get a mini resistance zone here. And even here, you got to look for the mini resistances as well. This is how I trade support and resistance. Now, look for the resistance when you hop on the charts, look for the support, and then all you do is look for your entry confluences to either target the resistance as take profit or target the support as take profit, whichever way the market sways for you. Also just only try to trade during like high volatility times. Like New York session opens at 8:30 a.m. Central Standard Time. I trade then on US 30 and I trade on NASDAQ. Those are the only two I trade um, during the New York Stock Exchange. I don't trade any other pair during the New York Stock Exchange. I will put a video out on which pairs to trade at what times. Also, gold, I'm gonna throw this one in there too. Gold at 7 a.m. usually has high volume. So you can look at gold. Gold is tricky to trade. So before you trade gold, just try to practice on demo accounts or, just back test the strategies. Make sure gold is working for you because gold can be extremely tricky to trade. Appreciate y'all tuning in to the support and resistance strategy. Hopefully it's helpful. Hopefully you gained a lot of information. Like I said, I will reference another video just so you can have a second perspective on it. Maybe they explain something better than I did, or maybe it'll help you better understand. I'm not sure, but all the videos I reference are videos I learned from personally that help me understand, because there's a lot of videos out there that can trick you and mess your mind up and confuse you on everything. And I'm just trying to give y'all the straight to the point what I wish I had when I started trading. So again, appreciate y'all for tuning in. I will see y'all in the next day trading course video.